So, as a savvy investor, will you invest in these seemingly low rates? The rates are great for those who want to simply add some extra income to their savings, but for a savvy investor, it's challenging. What are your thoughts? Do you want a short or a long answer? Yeah, for those of you that always click on a video just to come and get the answer quickly and run away, my answer is yes. But for those who want to actually learn the whys and the wherefores, I'll see you on the other side. Hello my people, welcome back to the channel. I already thought that I will not come to this channel because I'm already in festive season mode. It's the end of the year. We can't continue talking about money, investments all year long. I was already hibernating in my festive season mode, but Michael dragged me out of hibernation. Michael is a staunch member of the Flow Finance community. Michael always has my back. That is why at some point some people thought that he was my burner account because of the way he was giving them masbos in the comment section. But so I wanted to respond to Michael in the comment section, but I decided to set up my ring light, bring out my camera again one more time during the year. So yes, Michael, I will invest in these low rates. Why? Before we start, the disclaimers. Please, I am not your financial advisor. I am not a stockbroker. I am not an investment banker. Neither am I a fund manager. I am just here to share my experiences investing in these instruments. You guys have seen the question that Michael asked me. This is my answer to that question. This is what I, Flo, would do. Before you make an investment decision, you have to consider your situation. You have to consider where you're coming from and where you're going to. So with all that said, the first reason why I think this is still a good rate is if you are on an investment streak. Let's say you started, when I brought the gospel of FGN Savings Bond back in March 2024, a lot of people started investing in April 2024. The rate was so high, then 18 point something percent. If you're on that streak, you want to continue. You don't want a break. You've had it good during the 18% era. If you started in April last year, it was at 18% interest rate for the 3-year bond. And it was like that till February this year, at least. Let me check to confirm that. We had 18.799% in February this year. In March, it dropped to 17.6. So that's number one. It's still a good rate if you are on an investment streak. The second reason to support that one, while it's still a good rate, is if you find the average of all the interest rates since you started investing. Let's say you started investing in April 2024. Find the average from that 2024 till this December 2025. You'll see that you're still winning. Let's do that together. December 2025, they announced 13.838%. Originally, the DMO announced 14.5 something. Very early in the morning, the first group of people to see it, to downloaded 14.5 something, and they were still happy that, we are still at 14.5%. But before you know it, they pulled it and changed it. In fact, by then, a lot of stockbrokers have announced 14.5 something percent. But you can see that the average from April 2024, when it was 18.046%, till this December, when they gave us 13.838%, is 17.252%, which is still above. What is above 17.2% in interest rates now? Is it commercial papers? Even if they quote more than this or about this, remember, all you have to pay for commercial papers, you have to pay withholding tax. So you're still winning. This is above today's treasury bills. It's above MMFs. So you're still winning based on that average. Even if you check it from this January, let's say you started investing in January this year, you're still getting 16.5%. So it's still good if you consider where you're coming from. This is the second reason, yeah? It's still good on average. If you started investing during the 18% era that I have been shouting it, by now, everything will be balancing out. Then the third reason is that remember that unlike these short-term instruments like treasury bills, when you invest in FGN Savings Bond, you're locked in for 3 years. Yeah, on this channel, we don't invest in 2-year tenor. You're locked in for 3 years. Go and ask those that invested back in the day when we're already calling it back in the day when the interest rates were 18%. They will be enjoying till 2027. Yeah, for 3-year bond. And some people that invested in February when it was still 18%, they will enjoy till 2028. That's the absolute lock-in, because it doesn't matter what the rates are doing today. Once you've invested in a particular edition, you will be in that rate. The government will be losing. Yeah, your coupons will be paid at that rate till maturity, because agreement is agreement. So this is why it's good for you, because I tell you, from the trend is trending downwards. You can see that since September, it has been dropping by 1% month and month. So if you want to key in, like some people always say, if you want to key in, if you're on an investment streak, you better still enter now, because this may continue to drop. We don't know. In fact, I was talking with somebody on the bootcamp and I was telling the person, remember, this is the last known interest rate. And if I am to predict, I'm going to say that it will be 13 point something percent based on it. And lo and behold, it's 13 point something percent this month. That's just a wild or lucky prediction. Yeah, I don't have a crystal ball. If you invest in this 13.8% now, it may look like it's low, but if you ask me, remember, I don't have a crystal ball. But if you ask me, I'll tell you that these rates are heading towards 10%, 9%, where it was before they did tumbom economics that drove everything crazy, that sent it to 18%. Yeah, if you ask me, I will say that that's where this is headed. Okay, and when it gets there, assuming it gets there, like prediction, oh, this is something in the future, I don't have a crystal ball. If it manages to get there, brothers and sisters, this 13.8% that looks like it's low now will become the high interest rate, because already you've locked in, and that's what you'll be earning for the next 3 years, of course, if you choose the 3-year tenor. On the other side of the coin, because on this channel you guys know that I always talk about the other side as well, because we're in this Tinubu's volatile era, anything can happen. Yeah, they make one announcement now, the inflation starts going up again, they start chasing it again with basis points, and then you have the high rates again, and then you will be stuck at this one. But what do? If the rate starts rising, you start investing more, and this average we just did now will balance everything out. This is the way I see it. This is the way I see it. Locking in on the long term, to be honest, whatever happens, you're good. Let's just say it. Whatever happens. Look at the other day, last month, was it not last month that we were paid the rent from the Sukuk bond, the 7-year Sukuk bond? You know, I don't like overly long tenor bonds, yeah? But you guys influenced me on that one, because everybody was like, Flo, this 3 years is too short. I need a long-term bond. So I peeled my eyes for the Sukuk bond. As soon as it came out, I announced it, and everybody jumped in. A lot of people jumped in. I jumped in too. And when I received my coupon, man, I went back again and checked. It was 19.75, man. So 19.75 for 7 years. You can imagine. It is sweet when you jump into a bond when it's high, because you will enjoy that for a long time, unlike all these short-term instruments. Okay, all this while I've been talking about those that have been investing. What about those that joined or want to join today? What are they going to do? Like I said, because of the locking in for a long time, it can turn either way. As far as I'm concerned, this is a good spot to be in. This 13.8% is a good spot to be in. If it goes down, you will be happy then that you locked in, you invested in this one. If it goes up, you continue investing and it will balance out. That's the way I see it, okay? That's the way I see it. as everything is dropping, like treasury bills are dropping, everything is dropping. You can see all over. It's not like the other ones are stuck in the 20 something percent they were on. Everything is dropping. So if you want to lock in, you lock in. If you don't want to lock in, you leave it. This is not the Buhari era. This is the Tinubu's era. So I understand the challenges of making this hard decision, but this average alone should tell you, yeah, what you need to know. But remember, I'm not your financial advisor. Don't take my word for it. Watch this video over and over and over again and make sure that this averaging that I talked about makes sense to you before you make the decision to invest. So that tomorrow, if this thing rises to 20 something, who knows, tomorrow it may be 25% and you start calling Flo, I shouldn't have invested. But okay, what's the alternative? You don't invest, or you go and invest in treasury bills. Okay, go and invest in treasury bills now. Put that money in treasury bills. I mean, you can spread your investments across several instruments if you want, but make sure you leave some to lock in to this FGN Savings Bond rate, because whether it goes up or it goes down, average will help you. You will even out. That's all I have to say for this video. And I guess this is going to be the last video for the year. I don't know, unless something else happens that, makes me to set up my ring light and turn on my camera to come and talk with you guys. I'm going back to hibernation because I'm already in festive mode. If you're traveling for the festive season, I wish you a safe journey. I wish you enjoy the season. And yeah, like this video if you enjoyed the video. And subscribe. Of course, if you're subscribing, it's for next year, because next year we go harder, because yeah, due to what has been happening in the country lately, and yeah, because yeah, enough of talking about money this year. I haven't uploaded any more tax videos, but next year we'll go hard on the tax law, because so far we've been doing theory. I've released enough theoretical videos for you to understand the concept, but next year, that's when it starts, the implementation starts. That's when we start doing the practical. That's when we see how they're going to implement it, how they're going to chase us around and all that. And of course, more videos will be dropping here. See you soon.